let's welcome in Deepak Shenoy, who's the CEO of Capital Mind Mutual Fund as well. Mr. Shenoy, a very good afternoon to you. Thanks so much for joining in today. Before I get to a few aspects, how are you looking at the auto numbers coming in? Because while the expectations were slightly subdued for the passenger car makers as well as the truck makers, the two-wheeler space has been buoyant. Decent numbers from Eicher as well as TVS. How are you viewing some of the key numbers that have just come in?
To be fair, I haven't seen some of the today's numbers. We usually wait till all the reports have come in before we look at assessment. But by and large, we've seen the last year or so finally showing some recovery in sales volumes after 2019 when BS6 started to come in and we had that insurance increase in price by the Supreme Court judgment. So since then, two-wheeler sales have not been like majorly high, and we've seen overall passenger vehicle numbers start to take up some of that slack. That we don't have the full data numbers yet, so it may be a move from one to the other. But by and large, we haven't seen some massive increase in anything, and it seems to be just more or less business as usual. I would expect that with the higher incomes in salaries on a taxable basis, I think the number has increased from 7 lakhs was tax free versus 12 lakhs is tax free from this year onwards. You'll have a slightly higher number of people that will be able to afford cars because relatively speaking, that much tax is saved. So hopefully some of the cars or bikes will see some increase in volumes towards the end of this year. However, interest rates haven't come down meaningfully, at least from what we've seen so far. So that will probably provide another round of push to sales. But again, I think that will expect to happen only around the Diwali season, Diwali time. So at best, I think these are incremental numbers. We'd like to see more car sales. India's terribly under-penetrated in the four-wheeler space. But to be honest, right now, I think we're not seeing the numbers meet that from a meaningful perspective.
So Shenoy, so because we've largely seen a very few selective names, and I know you can't talk names, but we've seen like players like TVS, which are largely benefited from both the presence in scooters as well as electric scooters and bikes. So there is that comfort for Eicher Motors. It is that pivot towards the premium space and the focus on sales rather than EBITDA margins. And Mahindra, this has largely become the consensus buy calls across analysts as well as people who've been speaking to on the channel as well. And today as well, the numbers that have just come in for all these three players have been very, very strong. So the expectation from the auto space, is it largely more bottoms up into companies that are looking to show growth, or do you expect to play some key spaces on valuation comfort on stocks like Maruti amongst others?
So, I mean, one of the problems is what's happened in some of these players is they've moved away from diesel. So diesel has been a considerable part of the growth path in the past years. And now that you don't have diesel, you have that as one of the issues. The second one is maybe a transition from two-wheelers to cars, maybe because of the bad roads, the weather, and so on, and the affordability of cars being higher. So you get a PV, and even in the PV, the entry-level SUV is more acceptable as an entry-level car today than the entry-level, sedan or the hatchback, which was the traditional way people would start a car. So we're seeing more sales of some of the entry-level SUVs than of the entry-level hatchbacks. This is actually a change that we're seeing, but on the growth perspectives, the names you've mentioned, some of them have actually innovated in the sense that they've actually got more features in their cars than some of the much higher end cars as well, especially those of some of the German manufacturers and all that who come in here. The entry level cars don't have quite as much features as some of the entry level cars, even in these segments. And I think some of the players in the two wheeler space have also innovated to that extent, bringing in entries into EV, but also improving the current ICE two-wheelers as well. So from a perspective of, I think the whole market should grow, but I think people who are innovating in this space will end up getting a lion's share of that growth. As we've seen, as you get new launches, you see a substantial increase in bookings whenever the feature set is quite substantially higher. So you saw that for at one point for the XUV cars that were released about, I think, 2.5 years ago or 1.5 years ago. You're seeing that in some of the new releases that are coming up, that have come up recently as well. So there is demand for good features, and to provide them at the right price point, I think the leaders are the ones that seem to be showing the way. The laggards don't seem to be innovating quite as much.
Mr. Shenoy, hi. Mahima also joining in. You did mention that consumption is likely to see pickup in terms of auto numbers as well, because you're seeing that tax bracket has now moved to that 12 lakh mark. Apart from autos, there are a lot of pockets of consumption that will also see some pickup, right? According to you, which pocket will be placed well in terms of seeing pickup in terms of its sales? And if yes, how can one play that theme right now?
So I think I mean, in our PMS, we actually have a bunch of stocks that follow the theme. But the idea here is tourism, transportation. These are one of the things that are our primary here. We think people will spend more on experiences, spend more on transportation simply because it increases the quality of life. But also, in that vein, it would be restaurants. So a slight layer of premiumization in terms of usage. So it's not really the toothpaste and the soaps that will benefit. I think it will be the slightly more premium areas where you will see a more demand, whether it is hospitality, whether it is perhaps travel or restaurants or things like that is where I think a lot of the consumption will increase. And perhaps in the transportation area also, because I think that's a dire need, especially non-metro cities, because metros are crowded, but in the non-metro cities, penetration is relatively lesser. We have the same weather, so you at some point you want to not be stuck in the rain on a bike. So at some point there will be people in who'll take the plunge, moving on to cars where earlier bikes were more prevalent. So I think that is where these are the areas where you will see this, but it won't be in entry level FMCG. There may be premium FMCG where this makes a difference. There's not that much over there meaningfully in India right now, but entry level FMCG is not as attractive as some of these other sectors.
Any specific names that you're liking in that space, transportation, tourism, etc.?
Yeah, I can't do names, so
Okay.
I'm sorry.
Understood, no problem. And in terms of your outlook on metals as well, there's ferrous, there's non-ferrous and precious metals. Right now, how are you viewing that space?
Precious like gold, I think, is doing well from a perspective of having gone up quite considerably in the last few years. So, as long as there's war and strife and all that damage and in uncertainty and Mr. Trump doing his thing, I think that is all a factor where the uncertainty will cause more interest in gold going up. But at some point, I don't feel that's a very productive asset to invest in. It's usually a risk or a panic asset, and the world generally goes from areas of panic to areas of stability. And that is usually not a great time for gold going forward. So if there is to be an area of stability at some point in the future, that gold is not the place to be. But I think overall, we are not seeing major increases. You've seen the drop from the in terms of the amount of gold that's been imported into the country, even the Jan to March quarter. And I think it's a little bit lower this time also. It's also because at one level it's become unaffordable, but there's also that there are other avenues of saving that people seem to like as much. So that's one layer. On metals itself, I think much of it depends on the tariff situation going forward. That's going to come to a head probably in July and August. Based on that, we'll see whether, for instance, China wants to dump steel all over the world price. It will change dynamics for India. Whether aluminum changes in terms of import duties by the US or by other countries on aluminum imports. So much of these depend on that. So I think right now it's a little bit dangerous to kind of make a longer term prediction. But in general, metals don't have a great growth story. So base metals not very attractive. If you'd asked for if there were companies that were doing a lot more of the heavier metals uh, in electric vehicle batteries or sensors, I think that would be an interesting proposition to play with. But I think, the base metals are not very attractive.
Mr. Shenoy, you did highlight about the uncertain geopolitical environment actually, and metals, and connected that very well as well. The other aspect with that is of course defense, and we've seen a lot of positive move on stocks like BEL among others. Do you have any kind of pecking order that you would look at, and also within that? We've seen a lot of new age private defense players, and I'm just taking these as an example, the likes of Azad Engineering, likes of Solar Industries. Those have shown market great prospects, and they've actually been rewarded as well. So very richly valued in those aspects, but growth prospects very high for these companies. How would you tie up both these arguments in the defense space, and your view on the same?
No, so there are two, of course. The public and private sector is one layer, but it's also the fact that India is spending a lot. India is the world's second largest arms importer. And a lot of that has come from the past where we used to import everything. We used to import the ammunition, we used to import the guns, we used to import the equipment and all that stuff. But now they're saying let's make more and more of that in India. So as more of that comes in and replacement starts to flow. So whether it's explosives, so one company will benefit from that. Whether it is guns and tanks, another company will benefit from that. And then there is vehicles that used by the armed forces. There is anti-drone equipment. There is missile technology. So there is a lot of stuff in this that's being made partly by public sector, partly by private sector, shipbuilding, and then the engines to make those ships. The shipbuilders may be public, but the engine makers may be private. I think there's a combination of a lot of these that will actually benefit going forward. But it's a proxy for also Indian manufacturing, which will probably benefit in the long term. And this is a 10-year thing. So it's starting now, but I think India will go forward, spend a lot more on defense, and a lot more of that spending, which used to go out earlier, will stay in India in terms of benefiting the Indian economy from Indian manufacturers that are going to be paid to do this. So I would say, have a broad spectrum, not individual plays. I won't say that is better than this. You need elements of each one. Some of them will have larger runways than the others, including in semiconductors, including in heavy earth batteries.
Right.
I think a lot of this will be used. So you should, have a portfolio rather than a single set of companies.
Interesting take there, Mr. Shenoy. Thank you so much for taking out the time and speaking with us at NDTV Profit.